Welcome to RPRA's consultation on the proposed 2026 program fees for the TIRES program. My name is Julia and I'm a communications advisor here at RPRA, and I'll be your moderator for today's session. In this webinar, we will communicate the proposed 2026 fees for the TIRES program and how RPRA develops those fees. We'll be pausing during the presentation to answer questions, and we'll take more questions at the end of the session as time allows. To ask a question, please use the Q&A tab. Type your question and hit send. Everyone can see the questions, and you can upvote any question you want us to answer first. We'll do our best to answer as many questions as possible during this webinar, but if we don't get to your question, please email it to consultations@rpra.ca. Please note this session is now being recorded. The recording and presentation slides will be emailed to everyone here and will also be available later today on our website and YouTube channel. Now I'll hand it over to Stacy Bowman, Manager of Policy, Research, and Data Analytics here at RPRA to start the presentation. Thank you.
Hi, everybody. Thanks for joining us on this Friday morning. We're going to talk about our proposed fee model and fee rates for the TIRES program for 2026 today. I'll take you through a few introductory slides, a bit about RPRA, a bit about our fee model and our fee setting methodology, and then we'll get into a bit about our budget, and then finally the fee rates. So beginning with who we are, for those of you who might not know, we're the Resource Productivity Recovery Authority, RPRA, or RPRA for short. We have a threefold mandate. We support the transition to a circular economy by winding up and transitioning legacy waste diversion programs, and that happens under the Waste Diversion Transition Act. And we also enforce the Producer Responsibility Framework under the current Resource Recovery and Circular Economy Act, which is the RRCEA. We are also tasked with providing digital registries for the province's excess soil and hazardous waste programs, which are under the Environmental Protection Act. And we also publicly report on the progress towards a circular economy by reporting on the data that we receive into our registry. A note that's important for today is that we do not receive any government funding, and we have to fund the entirety of our operations through the fees that are charged to our regulated parties or to registrants of our digital reporting services. That's how we recover the total of our costs to deliver our mandate. So this proposal, as mentioned off the top, is about the 2026 TIRES program fees. It is a proposal provided for information, but also to obtain your feedback. Fees are being proposed, as always, before they are going to apply. So these fees would be finalized and posted on December 1st and would take effect then on January 1st, 2026. The fees are derived from our 2026 budget, which is now finalized, and it has been published to our website as part of RPRA's 2026 business plan. And we do have some key information from that budget and business plan in this presentation that will give you some contextual information and financial information to help you inform the feedback that you're going to want to give us about these proposed fees. So we are required to consult on our fees for at least 45 days, which we are doing right now, and post final fee rates at least 30 days before they come into effect. So that's why they'll be posted by December 1st. We're in the middle of our 45-day consultation. It began on September 29th, and it'll end on November 13th. So you can send feedback to our consultations email, which is right there, consultations@rpra.ca, anytime up until and including November 13th. You'll be able to access a recording of this webinar, which will be posted to the consultation webpage, which has a lot of information about this consultation and the proposal on our website. There will also be a consultation report posted that will summarize feedback received during the consultation, and that will be posted to the website along with our final fee rates on or before December 1st, and stakeholders will all be notified of that posting. If you have any other questions about the consultation process, you can ask them here for sure. You can also visit the webpage, as mentioned, lots of information there. And just a note, the consultation report will also include questions and answers from this webinar and all our webinars. So that'll all be captured as well for you to see at that time. And in the meantime, as a recording on our website by the end of today. So let's get into the fee proposal. So a little bit of background information for you. We have 3 revenue sources. We recover our costs by setting and collecting fee revenues from the producer responsibility program registrants. So that would be Tires program registrants, for example. These are producers that are required to register and report to RPRA under the RRCEA regulations. We also charge fees to registrants of the excess soil and hazardous waste program registries. They're obligated under the EPA to register and report through our registries, but the MECP is responsible for compliance activities related to these programs. RPRA does not do compliance for these programs. Only under the RRCEA are we responsible for compliance and enforcement. We also still recover some costs through monthly cost recovery charges to remaining industry funding organizations. And those funding organizations were relevant in the legacy waste diversion programs, and they are still winding up under the Waste Diversion and Transition Act. So there's a bit of fee revenue that comes in through that source as well. So our fees support the delivery of our overall mandate, that 3-fold mandate, which I mentioned before, and a little bit more detail about what goes into the delivery of those 3 pillars of our mandate. We need to develop and maintain registries. We need to operate those registries and provide support to all registrants to them via a call center, via availability by phone and email, and via also educational and guidance materials that we provide on our website. We also need to ensure compliance and enforcement of the resource recovery requirements, and we need to publicly report registry data and information about our compliance activities to our website. And then we're also responsible for the oversight of the operation and windup, as mentioned, of the legacy waste diversion programs and the industry funding organizations that remain. So fees support all of these broad deliverables and the key activities under each of these points that are required to fulfill these deliverables. So this slide gives you an overview of our fee setting approach and the 6 main inputs to that approach. We do have a general fee setting policy, which you can access on our website, that provides overall guidance for setting our fees. That means that always the fees that we set, the consultation process, and any other public documents have to align with that policy. The 6 main inputs that we have for the fee setting process are our annual budget, as mentioned, which is in the business plan. That's the large bucket of costs that we have to recover. We have a cost allocation methodology, which guides the allocation of that budget between the different programs that we operate. So all of our producer responsibility programs, as well as the hazardous waste program registry and the excess soil registry program. We also have to decide how to use any surplus funds that we receive from the windup of industry funding organizations. That can be applied to the revenue targets for a given program. There is often an adjustment to recover prior year deficits in a program or to refund a prior year program surplus. And then for each program, there is a fee model, and that's how that program's cost allocation total after adjustments for prior year deficits and surpluses, and after any adjustments for surplus funds received from windups, that fee model takes that figure that's left and determines how and what fee payers within that program are going to be charged in order to make that revenue target. And then we also have to estimate every year in order to inform the values that go into that fee model, the number of fee payers, so the number of registrants or producers in a program, and also the amount of material that we expect will be supplied under each program. And there's a note down here that in 2027, this list of fee setting inputs will expand to 7, because there will be a decision made, if required, about adjustments due to the collection of administrative penalties during the year. And we have a great fees webpage, which lays out all of this information in detail. It goes into much more detail than I'm able to go into here. It's on the website, so you can start there for more information. I am going to give you a bit more detail about cost allocation and how we do that at RPRA. So just as a reminder, the cost allocation methodology is how we distribute our total cost recovery target, or total budget, between all the programs that we administer, and fairly recover costs related to each of those programs. And one of the goals is to avoid registrants from any one program subsidizing costs of another program. That's what this methodology is designed to do. So the cost allocation methodology has 2 overall cost categories. There are direct costs, which are costs that are to a specific program. Those could include registry amortization for a registry portal specific to a program, foundational costs for that portal and interest, professional fees associated only with that program, or certain IT or registry related expenses, enhancements, that sort of thing, only benefiting or required by that particular program. And then the other large category would be common costs that we can't directly attribute to one program because they're either indirect or they're shared. So indirect costs could include board remuneration, amortization of non-registry loans, leadership and certain administrative salaries, and also office supplies. Shared services costs include most of our staff salaries and benefits, our IT service costs and support costs, and things like software licenses. So these common costs in these 2 subcategories, indirect and shared, are divided among all the programs using cost drivers. And one of those would be the number of registrants for the hazardous waste program or the excess soil program, or the number of producers for producer responsibility programs. There's also an annual contribution to our contingency reserve, and that's allocated to each program based on that program's share of the total budget. So that's a pretty high level overview of that methodology. Again, that fees webpage gets into more detail. So if you would like to learn more about that, that's a great place to visit. So we'll pause here for a few questions, if there are any, about our overall process to set these fees, about our fee setting models, methodology, our cost allocation methodology. Just give the group a couple minutes. Doesn't look like there's any questions yet.
Thanks, Stacey. Yeah, no questions yet, but remember for the attendees that are joining us this morning to just hit the Q&A tab and type your question there. I don't see any just yet, so that's okay. So thank you, Stacey. So now I'll hand it over to Cameron Perrick, who is RPRA's Director of Programs and Stakeholder Relations.
Julia, and thanks, Stacey, for all the great setup. So this next section is going to cover information that is pulled out of our 2026 budget. We're going to review what drives our budget, some of the new investments that we're making, and how RPRA's budget is allocated to each of the programs, so how much each program picks up and what's driving some of those changes year over year. And just flagging again, if folks want to learn more about RPRA's business plan and our budget, you can visit RPRA's website where the business plan for 2026 is posted under our corporate documents tab, and you'll find that the most current business plan plus all of our previous business plans posted there. Okay, so the foundation of RPRA's business plan is actually our long-term strategic plan, again, posted to the corporate document section of RPRA's website. We finalized and published our strategic plan, which is a 5-year plan from 2025 to 2030. It establishes the organization's strategic goals. This strategic plan was consulted on with our key stakeholders to help identify the needs of folks as well as the best ways for RIPRA to meet our mandate. We established 3 main pillars, which are offering accessible registry services that provide value to registrants, ensuring effective enforcement that supports waste reduction and a healthy resource recovery sector, and ensuring that we're a trusted and useful public information source about resource recovery, waste, and RIPRA activities. Then the 2 following strategic goals are a little more kind of inward looking, ensuring a connected culture here at RIPRA where employees can grow and do meaningful work, and making sure that we have robust internal systems and processes that remain innovative and adaptable to change. Now, when our business plan is organized in a way that each of our planned activities that are described in the business plan relate to each one of these strategic goals. Okay, so getting into some of the budget numbers, as Stacy noted, our revenues come in from 3 main sources: the producer responsibility programs, digital reporting services, and our legacy waste programs. I'm going to flag a few larger changes. One is the decline in the revenues anticipated to come in from the WDTA programs. So the remaining programs yet to be terminated, that's OES, Ontario Electronic Stewardship, OTS, Ontario Tire Stewardship, and Stewardship Ontario, which it continues to deliver the legacy Blue Box program until the end of this year when it operationally winds up. So we do see about $600,000 in declining revenues from that program, which is picked up in large part or entirely by the producer responsibility program registrants. For the digital reporting side, we see largely flat, small increase in budget, but not much change there. And that increase is due to, it's picked up by the HWP registrants, where we also anticipate a little more activity and level of effort to support that program. And we don't talk about the fees for that program, but some of you might be involved in that. You might be generating hazardous waste in the province and having to report. And what I can share on this webinar for those folks who are interested is that HWP, the flat manifest fee and the variable tonnage fee rate for that program is remaining unchanged. Now over to the producer responsibility programs. The biggest change there is, in addition to this picking up of the WDTA program lost revenues, is a direct investment in supporting the Blue Box program. Not all folks on this call, your tire producers largely, but you might be involved in the Blue Box program. So we do see an increase in the budget related to the RRCEA, but the majority of that increase is related to direct investments in Blue Box support, which will be borne by Blue Box registrants. Okay, so I'm not going to go through every expense item here, but just flagging the most significant changes are increased to salaries and benefits, which is largely driven by new staff that we're planning on bringing aboard to support the Blue Box program. So again, that's a direct cost paid for by Blue Box registrants. Another change year over year that I'd like to flag is related to our reserve recovery. So you can see there's about a $500,000 decline. There are certain levers that we can pull to help provide relief to registrants. We know that it's a challenging economic environment presently, so we've made a decision to recover less related to making contributions to our operating reserve. so that's one option we've explored and then finalized in our budget to help provide relief to registrants. In terms of this is just a visualization of the previous table. As you can see, majority of our expenses are in salaries and benefits for staff to support the program, support the delivery of our mandate, followed by our investments in technology, building the portals that support registrants in fulfilling their compliance obligations, reporting to us, your information and how we collect and analyze that information to support our compliance enforcement mandate, and then the amortized cost of the upfront investment in building those portals that's amortized over 10 years for each of the registry portals. So in our business plan, we do provide a lot more detail than is on this slide, but some of the key activities that we'd like to highlight for this group that are shared in our business plan that the fees will support. We plan to develop a pro collaboration strategy working. We recognize that it's really important that we continue to build a strong relationship with the pros. So that's identified in our business plan. Implementing processes and technology changes based on the collection system, like recent amendments at the end of December 2024, mean that we'll need to update our collection system map, which both supports Ontario residents on identifying where they can drop off obligated materials, end of life obligated materials, but also supporting our ability to do compliance work on the back end to ensure accessibility requirements are being met. We're going to increase our accessibility and impact of publicly reported registry data for both registrants and the public. So again, just strengthening, the fulfillment of that third pillar of our strategic goals, which is, providing public information. So making investments there to ensure that the information we share on our website is both timely, accessible, and useful to registrants and Ontarians. And operationalizing the Canadian EPR regulators framework. So, we work with those in our community practice, EPR regulators from across the country to identify, where we can harmonize, where possible, in support of burden reduction for registrants. We know you don't just supply your tires into the Ontario marketplace, you supply across the country. So where we can make it, streamline that reporting process or other areas of compliance, complying with the regulations, we're just kind of formalizing that relationship with or in the process of formalizing that relationship with our EPR regulator partners. And we plan to review our registry procedures to identify opportunities for operational efficiencies. Those registry, we receive lots of feedback on our registry procedures and how to improve them. So, in the spirit of continuous improvement, we'd like to focus on enhancing those registry procedures for ease of use of the registrants, ease of, understanding how to comply and report required information, but also for our own purposes, making sure they're more efficient for us to implement. In terms of how each program picks up a share of RPRA's budget, this is a breakdown of each of the programs that RPRA supports. The largest program in terms of level of effort is our Blue Box program, and therefore it picks up the biggest share of RPRA's budget, followed by our Has Waste program, and then you can see the breakdown of the other programs RPRA supports. The tires program there picks up approximately 9% of our budget. And then you can see at the bottom the bar that breaks down the proportion of each of the different types of programs that RPRA supports between the producer responsibility programs, our digital reporting services, and our WTTA program windups, which will decline in the next 2 years down to zero as all of the programs are wound up and terminated by the minister. Or the remaining programs. Okay, so in terms of we've got each of the program allocations that we'll share on the next slide. But what we want to acknowledge that in each year, as we set fees, we use our best estimates of the amount of or the number of producers and the tonnage that will be reported in aggregate. That helps us set our fees. However, there are times where we underestimate and end up collecting a bit more than we expected. So that would create a program surplus. So each of the program surpluses, we have options in terms of how we apply that surplus in each year. Our overall goal is fee predictability and stability. So that's what guides us and how much of each program surplus we are applying. So in the tires program, you can see that we had about $190,000 in surplus, and we've chosen to apply 88,000 to the program allocation to reduce fees, while also holding back 80. I know it's a confusing number because it's split in half, but we're also holding 88,000 for application in future years. Now, this is where we are interested in your feedback. If producers feel that immediate relief would be helpful, that's a lever we can pull, applying more of the surplus that we're holding on to in this year to further reduce fees. And if that's something that producers are interested in, please, we're interested in hearing your feedback, and you can submit that to consultations at RPRA.ca or share some thoughts today in the webinar. Okay, so this table, where we'd like to draw your attention to is really the the 2026 program allocation row, which shares how much of RIPRA's budget each program picks up. The row to the right, which is our 2026 recovery or prior year surplus or deficit, is how much we propose to apply, which gives us our revenue recovery target. And that's the basis for how much we feel the program needs to recover, and that will inform fee rates for 2026. So for the tires program, we have a $2.6 million program allocation following the application of $88,000 in program surplus. We have a total recovery target of 2.582 million, which is an increase year over year of $186,000. Now that increase is largely driven by two factors. The first being the tires program and all of the producer responsibility program picking up that share or that decline of around $600,000 from the WDTA programs requiring less oversight and anticipating those programs, at least OES and OTS, winding up by the end of 2025 or 2026 or sometime in 2026, subject to the minister terminating those programs and any outstanding CRA issues or fulfillment of the steps outlined in the wind-up plan. Once all those things happen, we can terminate those programs, and any of the revenues that were coming in from those industry funding organizations would cease. And like I said, the tires program being one of the programs that picks up that lost revenue or share of that lost revenue. And then the increase is also being driven by investments in RIPRA meeting our mandate, delivering on our strategic goals, and just inflationary pressures that we're all dealing with that our budget accounts for. Okay, just to break down again some of the details around what I just described in terms of direct expenses, so direct costs to the Blue Box, or sorry, to the tires program. We're not anticipating much change in terms of direct cost to the tires program. Now, just some examples of some direct costs would be if RPRA had to engage a consultant or professional services to support the tires program in any way, that would be characterized as a direct expense and be paid for by tire registrants. So we're not anticipating much and no real new direct expenses in 2026 related to the tires program. The indirect and shared expenses allocation, so that's increasing by 10%. So that's increasing with RPRA's budget. And the program share of RPRA startup costs and reserve contribution, as we noted, we're planning on ramping down that contribution this year. So there's a decline of about 40,000 there. So the total costs we recovered are increasing by 7.3% once we apply the program surplus of close to $90,000. We get our revenue requirement, which is 2.58 million, which is an 8% increase year over year. However, the fee is not going up by 8% because there are other contributing. Oh, I'm not into the fee yet. Okay, we'll get into how it impacts the fee rate, but maybe we can pause. That was a lot of information, and Julia, if there's any questions that have come in, we can help talk through them.
Yeah, there's no open questions right now.
Okay.
We can give it 10 seconds just in case, but at this moment, there's no open questions.
It's a lot of information to absorb, so I get it. But we are, just flagging. I'm sure we'll get to it at the end. But if folks do have questions that may help inform their submission of feedback to RPRA, we encourage you to reach out and ask any questions, and we're happy to clarify any of the information provided in the proposal. All right, we'll have another stopping point for questions after we chat about the fees. Yeah,
One
Stace, go
question
ahead.
just came in actually, just now. The question is, are the increases for tire fees proportional compared to, for example, the blue box fee increases? I hope I sort of read that in a way that makes sense.
Yeah.
Um,
I can take a stab at it and then you can enhance it, Stace.
yeah, and the later slides might help a little bit, but yeah, go for it. Go for it, Tim.
Yeah, I mean, every program picks up a share of RPRA's budget in proportion to the level of effort. So kind of the number of registrants and the amount of tonnage supplied. So we saw the blue box, picks up the largest share of RPRA's budget. However, programs that incurred direct costs. So for the blue box program, and we don't have a lot of the blue box program information because this is the tires group that we're speaking to, but the proposal posted to the consultation page as well as our 2026 business plan describe this. But the blue box program does have a large direct cost or direct investment in supporting that program. So their fees are going up by quite a bit more than and their program allocation is quite a bit more compared to the other programs. So yeah, they don't all increase or decrease with the increase to the budget. It all depends on where that money is being spent. So direct costs definitely drive individual program fee increases. Hopefully that helps. Did I get it, Stace? I'm seeing nod.
Yep. Yeah,
Okay.
I don't have anything to add to that, but Adrian, if that did not fully answer your question, feel free to type in another one. Also, you can email anybody whose question does not get answered during the webinar or maybe isn't answered to the extent that you would like it to be or you still don't understand. Please email us at consultations@rpra.ca and we will get back to you individually. We do have a couple other questions that came in. The next one
Yeah.
I'm going to pass to you, Cam.
Yeah,
That's your
yeah.
wheelhouse
A
for
bit out
sure.
of scope, but it's the right group. So I'm unfortunately don't have an update on the OTS wind up, but what I can share is the status of it. Um, the OTS liquidator has done a lot of work to complete all of the steps in the wind up plan. Um, they're currently awaiting a final decision from the CRA on a claim that they have made in terms of historic over remitted HST. in the amount of $1 million. Once that CRA decision has been received, the liquidator is in a position to complete the remainder of the steps in the wind-up plan and, and move that program into a stage where they can submit their final report to RPRA and the minister, and then await termination by the minister if the minister feels that all the steps have been of the wind-up plan have been fully implemented. So we're at the mercy of a CRA decision at this point, but we're doing our best to be as ready as possible once that decision is received, that we will move forward and continue to wind up that legacy program and the IFO. Hopefully that helps to answer your question, Glenn. And if you have any other questions about the wind up, please you can reach out directly to me. Now, this next question, I'll read it, but it is out of scope of today's webinar. But a question about why are we hearing from the haulers that there are backlogs at the processors and they can't pick up tires from our sites? This is happening often lately. I would share that if you have any feedback around what's happening on the ground in terms of the collection system, I would encourage you to send that feedback to registry@rpra.ca, and one of our registry and compliance support team members will gladly take that feedback and help answer any questions you might have. But it is unfortunately out of scope for today's fees webinar. Okay, I'm going to keep going through the slides. We're going to talk about impact on your fees for 2026. And if you have any more questions, please feel free to type them in. Okay, so in terms of did I have a setup slide? Okay, we're going to talk about the tires producer fees. All right, so the fee model remains unchanged this year. We're going to continue to implement a fee model with a fixed flat fee for small producers, which are under the program-specific supply threshold, and those who fall above that threshold and are deemed large producers, there'll be a variable per kilogram or per tire rate. So for this program, it's per tire for all other producers. So by including a variable quantity-based rate, RPRA's proposed fee model is aligned with the government's objective to hold producers responsible for the products and packaging they supply into the market when consumers are finished using them. Our fee proposal follows our general fee setting principles outlined in our general fee setting policy, which is posted to our website if folks want to take a closer look. And really what the policy is driven by desire to ensure equity, protecting small producers and registrants from excess burden, ensuring large producers and registrants pay fees that reflect the relative quantity of material they supply into the Ontario marketplace, and ensure that no producers have a competitive advantage on a per product basis. And then simplicity and predictability. So the per unit variable fee aligns with regulatory requirements for producers to report by weight, or for this program by unit, and enable revenue estimates based on estimates of future supply volumes. So we use historical data reported in our registry. This program is reaching a certain level of maturity where we're able to make good estimates on what we think is going to be reported as supplied into the province, and that helps to inform our fee setting for the upcoming year. So here's what you've been waiting for, which is the impact on fees. So for small producers, we're proposing a $5 increase to the flat fee from $95 charged in 2025 to a proposed $100 flat fee for the 2026 fee setting year, 5% change. And for the variable rate producers, we're proposing an increase from 2.12 cents, or sorry, 21.2 cents per tire to, from 20.4 cents per tire to 21.2 cents per tire. So a 3.7% increase. So what's driving that? We're estimating that based on what we're seeing in the data, that there will be more tires supplied to market, meaning that there'll be more tonnage to share this program's revenue requirement, meaning that the overall fee rate's only going to go up by 3.7%. Now, this is based on a rolling average of 2022 tires supplied in 2022, 2023, and 2024. We are anticipating that about 12 million tires are going to be reported in 2026. If that number, that's the rolling average, and if that number seems off, we're interested in your feedback. That's part of this consultation. The best estimate we can use will help ensure that we're most accurately recovering the cost to deliver the program. We also don't want to have a deficit that needs to be recovered in future years if we overestimate the amount of tires we expect to be supplied. So your feedback is really important here. So in terms of producers, we anticipate or estimate there'll be 218 small producers reporting in 2026 and 187 large producers supplying approximately 12 million tires. So in terms of the factors that are impacting the fee rate, we talked about the $180,000 increase in the program's allocation. That causes a 7.2% increase in the fee rate. That's offset by, okay, then as I noted, we anticipate more tires being supplied to market, which it suppresses the fee rate a little bit because we're able to spread out the program's cost across more tonnage. We're adding some of the surplus, so the $88,000 of the program surplus, which further reduces the fee. And then for small producers, we're not anticipating a significant change year over year in more small producers coming into the program. So we've got, that's what's driving that 3.7% increase in tires fees in 2026. So I'm sure we'll have some questions. I'll have to go back. But we just want to take this opportunity to share some other updates related to billing and invoicing good opportunity to share those that take effect in 2026. So RPRA will begin charging late fees. 1.5% administrative charge will begin to be in effect on late payments. Historically, we've had the authority to charge late penalties, but we have not. And we've now updated our billing system to enable that functionality. And effective Jan 1, 2026, RPRA will be implementing these late fees. In terms of some of the enhancements we've recently made to make it easier to pay your RPRA invoices, is all based on feedback we've heard from registrants. We did host or send out a survey in late 2024 to gather feedback on how can we make this billing and payment experience better and ensure greater flexibility in terms of how businesses would like to pay their fees. So some of the enhancements that will go live in November include improvements to make it easier for registrants to view and pay outstanding balances and request refunds for credit balances. So really, this is all about the user experience. The payment portal, you'll be able to basically see every outstanding invoice associated with your registry account. The ability to pay total outstanding invoices in each program at once. So this is largely related to the Has program, where a registrant may have a number of invoices based on the waste generation that's happening at their facility. So now they can kind of bundle the invoices together and pay them all at once as a single payment. The ability to designate an accounts payable user. This is going to be a new field in your registry account We've heard that there are some inefficiencies in terms of those who are supporting your supply reporting, and then getting that RIPRA invoice to your finance or accounting department. This will make it easier so that you can indicate an AP user, and they'll directly receive the RIPRA invoices once they're generated. The ability to save a preferred payment method for easy use in the future, including an enhanced direct debit payment method. So really, this is we've heard that paying by Visa may not be, or sorry, paying by credit card may not be preferred by all. So including additional payment methods, reflective of what we've heard, just allowing for more flexibility, and the ability to enroll in manifest autopay. Again, this is related to our HWP program, but just making it more efficient for folks to pay their RIPRA invoices if they have a high volume of RIPRA invoices that they're dealing with each month. Okay, so just before we get into any of the questions that have come in, just a reminder that please feel free to reach out anytime during the consultation period to provide us with or ask us with any questions about the proposal. But if you'd like to submit your kind of formal feedback, you can do that through consultations@rpra.ca. All of the feedback we receive will be considered in our decision-making process in setting the 2026 fee rates. And all of that feedback we receive will be reflected in our consultation report, which summarizes what we heard and how we considered the feedback as we made recommendations to the board to in support of the 2026 fees proposal. That consultation report will be posted to RIPRA's website, so it'll be on the consultation page for the 2026 fee setting. We intend to have a board decision and set those final fee rates before December 1st and post them to our website. Once that's posted, we'll also notify all stakeholders and participants in our 2026 fees consultation of the availability of those final fee rates, as well as where to find the consultation report. So just a reminder that you've got until November 13th, 2025 to share your feedback with RIPRA. That's the end of the consultation period. Okay, so we're going to get to the questions, and as Stacy and I and the team have a look at the questions that have come in, I'm going to turn it over to Julia just to gather some quick feedback on the delivery of today's webinar.
Great. Thanks, Cam. Before we just get into the questions, there are two that have just popped up, so thank you, Tammy. I'm actually just going to launch a quick poll. So we include this in all our webinars to gather feedback and help us improve future sessions. So I'm just going to launch it now, and the poll will remain open until the end of the webinar. So if you do have a moment just to complete that, that would be great. So that should pop up on your screen right now. Just only 7 questions. So if you just complete that poll, we'd really appreciate that. So we can now get back into the question and answer.
Okay, and just thanks all for your feedback. It is really helpful um, to understand whether areas that we could get better at delivering these types of consultation webinars. Okay, Tammy's got a question about how we will be applying APs. So I'll take, there's 2 parts to your question, and so she says, on slide 7 about the 2027 fee setting will include an adjustment due to collection of any administrative penalty revenues. What does that mean for tires? So first off, if folks are interested in learning more about how RIPRA is planning to manage any administrative penalty funds or revenues that we collect, we have an AP revenues policy posted to our website, which describes how RIPRA plans to use AP revenues. In short, any AP revenues collected will be used to offset registry fees. Now, how we do that will be included in the 2027 fee setting consultation. And we have collected some AP revenues in 2025, and the policy states that we apply them 2 years from when we receive the funds to the fee. So if we collect in 2025, as it's following us along, we're going to use those revenues to offset registry fees in 2027. Now, the second question, I can share some information about. So she asks, does it include the settlement agreement amount or just other direct AP collections? So for now, just other AP collection. The settlement, so she's referring to the 2023 performance. There was a settlement that was reached between RPRA and a pro representing a number of producers. RPRA has been engaging with the tires pros over the last few months to help inform the registrar's plan to manage the settlement funds. We're now at a point where in the coming weeks you'll receive producers will receive some information about how to about what RIPRA plans to do with the settlement funds. I can't share much more than that at this point. The plan's not fully fleshed out, but I can share that's coming soon, including the opportunity to participate in an information session to learn more, and there may be some actions required by tires producers. So more to come on that. But that settlement fund is not AP revenues. That's different, and it's currently being held by an administrator. Okay, the next question. Stacy, do you want to take the next question about
Sure.
late fees?
Yeah, I mean, the short answer is that there will be a lot more communication about how RIPRA will be applying late fees and the parameters around those. This is to inform you that historically we've always had the power to apply late fees. We have not done so, but we intend to do so now. But the details of that are still under consultation actually, and will also be shared with you at a later date. If you have specific concerns or specific parameters that your stakeholders would have trouble with, I encourage you to get in touch with us because we can pass that information on. But yeah, short answer is I don't have the details of the terms at this point. It's just a heads up for the group that this is coming. Give a few more seconds in case there are any other questions coming. And the feedback slide, just a reminder on how to submit written feedback to us.
I've said it a few times, but I'm gonna reiterate. We are RPRA is definitely open to if you'd like to talk through the proposal, please reach out. We're happy to set up one-to-one meetings for folks to help them better understand our fees proposal as well as gather feedback. And if you have any questions that you'd like to ask us at any point in time during the consultation period, feel free to reach out if that would be helpful in informing your submission of feedback on behalf of your organization. So with that, we got a few minutes left, but I'm going to hand it back over to Julia. I think we don't have any more questions to close out the webinar. And go Jays! I hope you're all watching the baseball. All right, thanks today.
Thanks, Cam. Thanks, Stacy. So yes, we have no more open questions. So again, thank you to everyone who completed the poll. Again, a reminder, if your questions weren't answered, please email us at consultations@rpra.ca. And that's all for today. So thank you again for joining us and have a great day. Thank you.